Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are really up to, and today we're diving into a filing that's a bit of a financial cleanup operation and might be a sign of bigger things to come. Make sure you're subscribed because we break down these complex documents and you don't have to. And if you want to join a community of fellow corporate explorers, head over to our Discord link in the description below. Alright, so what exactly are we looking at today? Well, it seems Zillow Group Inc. is tidying up some old financial arrangements from way back in 2019. It's like finding an old receipt for something you bought ages ago and finally getting around to dealing with it. This filing is essentially a heads up to everyone that Zillow is closing out what they call capped call transactions. Now that sounds complicated, but think of it like this. When Zillow first sold certain bonds promising to pay back money later, they also set up these capped call deals. These deals were essentially insurance for Zillow, protecting them if the price of their stock, specifically their Class C stock, went up too much. It was a way to manage risk during that bond sale. Now, the important part is that on August 25, 2025, Zillow is settling these deals and unwinding these capped call transactions. This means they are effectively saying goodbye to these arrangements for good. And what do they get out of it? The company expects to receive a pretty significant amount back. We're talking about 3.1 million shares of their own Class C stock, plus a chunky $38.2 million in cash. This is a big deal because it doesn't just mean a financial boost, but also a change in how many shares of their Class C stock will be floating around out there. So why is this happening now? The original convertible bonds these capped calls were tied to were fully settled way back in December of 2024. So these capped call deals were essentially lingering a bit longer. It's a bit like finishing your meal and then realizing you still have some dessert left on the table that you've forgotten about. Zillow is finally clearing that table. You might be wondering about the Class C stock itself. In the past, Zillow's Class C stock was listed on the Nasdaq Global Select Market. These capped call deals were directly tied to the value and trading of that specific stock. By unwinding these transactions, Zillow is also unwinding any direct link they had through these specific financial instruments to that class of stock. Now, the company also hedges its bets a bit by including a standard forward-looking statement disclaimer. They're saying that things like the exact amount they receive or what the other parties involved might do with the stock could change. They mention things like may and will and anticipate, and that actual results might be different. This is pretty standard legalese for filings like this. They're basically covering their bases, acknowledging that the future isn't set in stone and that market fluctuations could affect the final outcome of these unwind transactions. And who is signing off on this particular update? It's Jennifer Rock, the Chief Accounting Officer. This is a common practice for these types of filings, where the senior accounting executive confirms the accuracy and completeness of the information being reported. It adds a layer of accountability to the process. So let's talk about what this all means for Zillow. On the surface, this is a positive move. Zillow is unwinding some old complex financial instruments and getting a cash infusion along with a reduction in outstanding Class C shares. This can simplify their capital structure and potentially boost earnings per share by reducing the number of shares. That $38.2 million in cash is a nice bonus too. It can be used for anything from investing in new projects to paying down debt or even returning value to shareholders. However, we should also consider the context. Zillow operates in the real estate technology sector, which is heavily influenced by interest rates and the overall health of the housing market. While this filing itself doesn't detail their current financial performance in terms of revenue or profit, it signals a proactive approach to managing their financial obligations and simplifying their corporate structure. The fact that they are closing out these capped call transactions suggests a degree of confidence, perhaps that they have a better handle on their future financial trajectory and the performance of their stock. The potential for counterparties to buy or sell Zillow's Class C stock in the secondary market means there could be some short-term price volatility. This is normal when large blocks of stock are involved in financial settlements. Investors will be watching to see how the market absorbs these shares. In my opinion, this move by Zillow is a smart financial housekeeping task. It cleans up their balance sheet and removes a layer of financial complexity that was put in place years ago. While we don't have the full financial picture from this specific filing, it's a step that generally indicates a company is in a stable enough position to manage its past commitments and look towards the future. The key risks here are always tied to the broader economic environment and the real estate market. If those are strong, Zillow is likely to benefit. If they weaken, this simplification might not be enough to shield them completely. What's your take on this Zillow filing? Do you think this is a sign of good things to come or just standard financial procedure? Let me know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more content like this. And don't forget to swing by our Discord community linked in the description. We'd love to have you. Thanks for watching and we'll see you in the next one.